The custodians of trillions of dollars of global central bank reserves are eyeing a move away from the greenback, with gold, the euro and China's yuan all in favour. It comes as the splintering of world trade and geopolitical upheaval has sparked a rethink of financial flows. A report by the official Monetary and Financial Institutions Forum is due to be published later on Tuesday. It says 1 in 3 central banks managing a combined $5 trillion plan to increase exposure to gold over the next 2 years. The survey of 75 central banks was carried out between March and May and gives a first snapshot of the repercussions of Donald Trump's tariffs. Gold, which central banks have already been adding at a record pace, is expected to benefit further, with around 40% of central banks planning to increase gold holdings over the next decade. The US dollar, the most popular currency in last year's survey, fell to 7th place this year. 70% of those surveyed said the US political environment was discouraging them. In currencies, the euro and yuan stand to benefit the most from the diversification. Around 16% of central banks surveyed by OMFIF said they plan to increase euro holdings over the next 2 years. That makes it the most in-demand currency, up from 7% a year ago, followed by the yuan. The survey respondents expected the euro to reach about a 22% share of global reserves in 10 years' time, but Europe could attract a higher share of reserves sooner. Sources speaking to reserve managers say that's if the bloc is able to boost its pile of bonds that are currently dwarfed by the $29 trillion US Treasury market.